Hey, it's Khalil with the Cashflow Contractor. Thanks for listening and tuning in. If you haven't hit the subscribe button yet, now's a great time to do it. If you are interested in building your construction business to be profitable and to run without you so you can have less stress, more time, and more money, we want to send you more content that can help you do that. I talk to contractors all the time who listen while they're driving from job site to job site, while they're taking care of stuff in the office or at home. And it's a great podcast for them because it gives them actual ideas and strategies they can use inside their business in a conversational format with two goobers like me and Martin. So if you're interested in that, you want more strategies to help you grow and improve your business, subscribe now. Now, let's get into the show.
There's just this misconception in the business world that it's not possible to feel comfortable. Bull crap. That is not the way business is supposed to work. People wait too long to do it. They think banks exist to serve me when I need them. That's the business owner's perspective, but that's the wrong perspective. If you're going to go into business, don't put your personal financial health at risk. Have the intellectual honesty to admit to yourself that if a bank or even a third-party lender will not give you SBA funding for your business, that's kind of a red flag that maybe this isn't the business you should even be pursuing in the first place. In the world of business, there are just certain red flags that pop up that you shouldn't ignore, that tend to be a strong indication that there's something wrong with your business model. A good example of one.
Expert advice, practical tips, real-life stories. Have less stress, more time, and more money in your business. Welcome to the Cashflow Contractor.
Martin, we're wrapping up our series on cash. Are you all cashed out or are you out of cash?
I have cashed out in the past, and it's a subject that never goes away. I have to tell you this, so it's related because we have a CFO on today, but for the first time, I printed a year's worth of financial statements, just using the P&L, by month, downloaded it PDF, stuck it in chat, and said, anything in there you think I ought to see? And it came back with unbelievable. I mean, nothing really particularly interesting right now, just common stuff. But anyway, I did ask it what our gross margins would have been minus this product. So anyway, I'm all excited because I just wanted to see if it would read it. So I'm excited.
Well, that's actually a good, maybe
it's
we're
not
putting our
cash
guest on the spot here, but I want to see, Luke, welcome to the podcast. Excited to dive into cash today in terms of cash efficiency, how to find it, where to get it, all that kind of stuff. But yeah, thank you for joining the show. Are you using ChatGPT at all for analyzing financials? That's interesting.
We are not. No, I haven't fully gotten on board the AI train yet in terms of some of that kind of stuff. I created a job listing today for a role I'm hiring for, and I used ChatGPT to help me put together the job listing. Like, it's great for that type of stuff. But yeah. I don't know. I feel like I'm maybe hoodwinking my clients if I'm charging them to get expert financial analysis, opinions, and recommendations from a trusted, experienced, knowledgeable CFO. And all we're really doing is just giving them ChatGPT in the background.
Well, and hey, I don't think it's...
No, they could run ChatGPT. They won't be able to, and interpret it. No, that's not what I did it for. I did it to see, will this read these accurately?
Oh, for sure.
I tried it in the past, and they haven't. You still have to check. You still have to audit what you do.
Here's a really good example. I used AI for... I got our ERTC check a little while ago and, influx of cash. Hey, what's my tax position going to be on this? What do I need to do? Gave me the wrong advice. I did speak to a tax accountant. ChatGPT said, hey, you got to watch very carefully for 2025, what you're going to be doing with this cash that you just got. And then accountant said, well, it's actually it's revenue recognized for 2020 and 2021. You just amend your tax return. So it doesn't count towards any 2025 revenue. And so, that's completely wrong advice.
We're not replacing any people yet.
Yeah.
What the impressive thing was, it read a PDF and adds numbers and subtracts numbers and
Yep.
does trend lines
Yeah.
from a PDF. And I never printed it. I just, uploaded it from my computer. So
That's
Yeah,
so
it is
interesting.
impressive what it can do for sure.
Yeah.
I took an accounting CPE exam, and it was like a 100 question CPE exam, and I copied and pasted the whole thing into ChatGPT just to see like how good
Hey,
can
but now,
ChatGPT.
do we need to use a pseudonym for you now? I mean, John.
I was just doing this simply for the heck of it, just testing the knowledge and capabilities of ChatGPT, and I plugged its answers into the CPE exam just to see how ChatGPT did, and it got 80% correct, which is good enough to
pretty
pass the
good.
exam, but
Yeah.
not good enough for actually
Yeah.
making financial decisions for your business, right?
Yeah.
Right. Well, let's bring it back to the series. So we've covered profit first, which every CFO we've talked to is like, do not follow. But really good if you're pretty small and you need to get a grip on your finances. You said earlier before this, like sub 100,000, go for it. Just understand what's going on a basic level.
Yeah.
Um,
Understand that
so
it's meant to be the basics. It's the ABCs. It's something to get
yeah,
you started, but you ought to outgrow it pretty fast.
yeah. Then we talked with Lisa Dionisio about your cash strategy, building a cash cushion, how to deploy cash, when to deploy it, all that kind of stuff. Then we met with Jacob Kirshner, and we went over the how to develop a flat cash flow forecast over a 12-month period. We talked about you can do it monthly, weekly, whatever you need to do, but that was a pretty valuable episode as well. So today, cash efficiency, how to source cash. Let's talk about bankers to start. So I think we've heard many times before on this podcast, establish a relationship with a banker before you need a banker. What are some of the things that you think about, Luke, and things that you've seen with needing to establish that relationship with a bank?
Yeah, I mean, one of the biggest things is people wait too long to do it. They think banks exist to serve me when I need them. That's the business owner's perspective. But that's the wrong perspective, because it's not the perspective that bankers have. If you have a different perspective than they do, then you're going to struggle to work with them. You need to understand how banks and bankers think and align to that, or you're never going to have a healthy working relationship with a banker. The business owner wants to say, oh, I'm out of cash. I need to go to the bank and get a line of credit. Well, that's not how it works. Bankers aren't in the business of giving lines of credit to people who aren't financially healthy. They manage risk on their side, and they want to give credit to credit-worthy companies that are able to show strong, healthy financial position in terms of cash flow, in terms of profitability, in terms of financial management, and just being able to demonstrate that you know what you're doing as a company. So the time to go ask for something like a line of credit and start building and establishing a relationship with a bank is when things are going well.
Yeah. So what does that mean? Things are going well. Let's define that for our audience. I got jobs pouring in. Am I doing well?
It could be if you're managing those jobs well and you're managing your cash flow well, and that full pipeline is translating to solid profitability and healthy cash flow in a growing company, then yeah, absolutely. But if it's not managed well and that full pipeline is actually drowning you, it's sucking your cash dry, and you're struggling to keep up and fund the jobs to be able to complete them and earn the revenue, then no, it's not a good thing.
Yeah. And this is where every banker is going to want to see your books. So if you're using profit first, what's your banker going to tell you?
They'll look at your bank statements for that few 100,000.
Yeah, exactly.
Yes, they're gonna want better data.
Yeah. Okay. What exactly are they going to look at?
Depends on what you want from them. If you're going to a bank and wanting to just open an operating account to run your business out of, I mean, they'll give that to just about anybody, right? But if you
Right.
want to have more of a complete banking relationship with them, where you want your operating account, but you also want credit cards and treasury management and lines of credit and all of that, then they're going to want significantly more from you. They're going to want historical financials. They're going to want future projections. They're going to want to see your accounts receivable. Depending on the industry you're in, we do a lot in the construction industry. So you want to establish a line of credit and collateralize it with your accounts receivable. Well, they're not going to do that if you're a construction company and that accounts receivable is all on bonded jobs where the bank is going to be a secondary lien holder to a bonding agency. Then those accounts receivable don't do them any good in terms of collateralizing a line of credit. So you're going to have to go do some other form of collateralization if you want to get a line of credit.
Mm. So let's think about like, how many bank relationships do you think I should have? Is it just one, or should I be diversifying a little bit?
That's a great question. Bankers would tell you one, right? They want, and frankly, a lot of banks are moving to a strategy where this relationship banking is what they call it. There's so many bankers out there right now that will introduce themselves as relationship bankers. And what that really means is they want the entire banking relationship. So if you're not going to give them, as a business owner, your entire banking relationship, meaning they want your operating accounts, they want your credit cards, they want your treasury management, they want your debt. If you're not going to give them all of it, they may just invite you to pursue your banking somewhere else because they want to be the one-stop shop for you.
What's right and wrong about that?
I don't know if it's necessarily, I don't know if I'd say right or wrong.
That's a strong word.
More left
favorable
or right.
or unfavorable. Right.
Yeah, there's advantages to both for sure. I mean, the advantages are you only have to deal with one person. You have your banker at your bank and they take care of you. They provide everything you need. The downside is that bank may be the best option for your operating account, but their line of credit might be more expensive than the bank down the street. So you can't just split it and say, I'm going to have my operating accounts here because they're best. I'm going to have my line of credit over there because it's cheaper. So you lose some of that flexibility, but you get the advantages of simplicity.
Yeah. I think it matters let's go to that relationship. It matters what the relationship is with the person, right? You want to work with someone you get along with. How do you actually choose the banker you want to work with? Is it just solely off of the numbers?
I don't think so. No,
Okay.
I think it's a combination of a few things. It's the fundamental capabilities of that bank is one of the first things.
What do you mean by that?
I mean, the difference between a local credit union in terms of their capabilities, can they provide a robust treasury management function, right? What are their lending limits? What is their capacity? How can they actually, what are they capable of from a service perspective compared to like a large national bank, a JP Morgan Chase, a Bank of America, like these big banks that have all the technology, all the products, all the services. If you're a $50 million company and you need some robust services from your bank, you're probably not banking at the local credit union, right? So you got to pick a bank that has the capabilities to be able to support your business at the level that you need support. So that's going to whittle you down to a pool of banks that fits you. From there, you're probably interviewing bankers themselves and saying, where these banks that are a fit for me, where can I find a banker that's a fit for me? Someone who gets my business. They understand my industry. They understand my challenges. They understand what I need from a bank to be successful. And if somebody that I like, it's somebody that I get along with, is someone that's responsive, I know if I pick up the phone and call them, they're going to answer. I know they're going to be there when I need help and support from my bank. So I think it's a combination of the technical capabilities of the bank married with the right service provider, the right banker within that bank that fits you and your business.
So, and I'm sure you want someone who's also just looking out for your business, not someone who's just trying to sell you their products or push you into a certain, line of credit when you should be doing SBA or I don't know, right?
That's right.
Okay.
Someone who will do what's best for you, not what's best for the bank.
Yeah. Okay. Or best for both, maybe, right? We don't want to lose our banker. And
doing what's best for you is actually what's best for the bank.
Right. Quick ad break to tell you about Growth Kits. This is actually my company, and you may have seen it around, but I started Growth Kits because I kept seeing contractors struggle with the same problems over and over again. They were trying to be better organized inside of their business, but kept drowning in the day-to-day operations. So whether you need a better CRM, a hiring process that actually works, or you just want to make sense of the tech stack inside of your business, we have systems that are built specifically for contractors. You can either grab our DIY guides and implement these systems yourself, or you can hire us to work with you on it and implement it for you. No massive consulting fees, no year-long commitments or monthly retainers. Just pick what you need right now and let's get it done together. Head over to growth-kits.com to see how we can help you construct your success one system at a time. That's growth-kits.com, or just click the link in the show notes. Now, back to the show. So you mentioned some of the products already. Let's kind of walk through all of them. What does a line of credit typically look like? Why should I consider a line of credit versus a credit card? Let's talk about that for a minute.
Yeah, happy to. And I'll do so from the perspective of the construction industry, because that's where we spend a lot of our time. And, the majority of our clients come from that space. So a line of credit in the construction industry serves a few purposes. One of the biggest reasons that a lot of construction businesses want a line of credit is that it expands their bonding capacity, meaning you can actually serve more revenue because you can get more bonds on bigger jobs to be able to win larger jobs and more work. And the ability to show access to capital directly impacts your bonding capacity. So a lot of construction businesses will go out and open a line of credit and never touch it. They don't need it. They don't need access to the money. They just want the
bonding. Is there any danger in not touching it? Like, is the bank going to revoke that from you?
Not usually, but certainly you want to make sure you understand the terms and conditions that you have with your specific bank. They don't require some transaction activity to flow through that account to keep it open. If they do, you draw 20 grand on it once a year and then pay it off, right? Just keep it open. But it's also really nice to have there because you don't know the future, right? You don't know when the next financial crisis or global pandemic is going to hit, and you need access to $500,000, $1 million, $5 million line of credit, depending on the size of your business, to make payroll, keep your business open, to be able to weather tough times. Like it's something you really want to have there because it helps mitigate a lot of the risk of uncertainty.
Okay. So that's the line of credit. You mentioned credit cards, so you can get credit cards directly through your bank rather than going through Capital One or whatever it is.
Hey, real quickly, back on line of credit. The flip side of that just comes up a lot with clients is you max it out, and banks typically want to see that line of credit go to zero sometime through the year. And I tell people, whatever you got to do, pay it off on Monday, take it back, or on Friday and take it back on Monday. Maybe you have something to speak to that. They're always scared that maybe they won't loan it back to them.
Yeah, no, you're 100% right. It's not a line of credit. It's a revolving line of credit is really what it is. Meaning they want it moving. They want it cycling. They want you drawing, paying, drawing, paying, drawing, paying. They don't want you using it as a term loan. It's not, I get a $500,000 line of credit and tomorrow I go draw $500,000 on it and buy something for $500,000 and make interest only payments from that point forward, right? That's going to be considered abuse of the line of credit in the eyes of the bank, and they're going to shut you down.
Yeah, they'll term it out on you.
They will.
Yeah.
And then they'll never give
whatever
line of credit again.
Right.
Yep.
Gotcha.
So just something to be aware of. I don't know that you always have to go to zero, but like you said, Luke, they want to see significant change up and down, evidence that, okay, there's money flowing through there.
Yeah, they must see you using it for short-term capital needs.
Okay, so line of credit for short-term. What can you explain benefits of doing the line of credit versus a credit card? Is just the interest rate going to be different?
The interest rate is typically more favorable, and usually you get access to more credit, right? A credit card limit is usually going to be quite a bit less than what you could get from a line of credit.
Okay, gotcha. And what's the typical interest rate? I mean, obviously it can be all across the place, but what should you be shooting for in a line of credit these days? It's March 2025. You'd have to look it up.
Yeah, I mean, there's so many variables that impact that. One bank to the next is extremely different. Your credit worthiness versus somebody else's credit worthiness.
Okay, what's the lowest you've seen and the highest you've seen maybe?
The highest I've seen on a line of credit, it's like 15%.
Okay.
Wow.
Lowest I think I've seen recently is like 8 or 9.
8 or 9. Okay. So, but then on credit cards, you're looking at 20 plus. So oftentimes maybe 30 if you're really bad, right?
Yes, they can be pretty significant.
Yeah. Okay. Gotcha. So let's talk about the SBA for a second. That might be for more of those assets that you shouldn't be purchasing with your line of credit. So yeah, talk to us a little bit about SBA.
Yeah, the SBA is a great program. It's pretty easy as long as you're somewhat creditworthy to get access to SBA funding. And there's kind of different tiers of SBA lending, if you will. You can get SBA funding through a bank, but a bank is only going to offer SBA funding to what they would consider to be A tier creditworthiness. So if you've got excellent credit, you can get SBA funding through a bank. If you're struggling and you're maybe what they would consider to be more of a B or C tier borrower, a bank is not going to give you SBA funding. But there are other third-party lenders that are not banks that will do SBA funding for lower credit-worthy borrowers. So just because your bank says no to SBA funding doesn't mean you don't have access. It just means you may need to pursue it through a different lender.
Okay.
How in the heck does that work? Well, go ahead, Khalil. But
what I was going to say, I've only heard about people going through a bank. So I'm curious who these third-party lenders are, how that works.
Yeah, they're standalone. Like I've got a guy in my network who does SBA lending, and he does it through other finance companies that he has access to. They're not like brick and mortar commercial, public facing banks. Like you can just walk into a branch and deposit money, right?
Sure.
These are lending institutions. They are set up to lend money, and they have a little higher risk tolerance than a bank does. And so they will do SBA loans with lower creditworthy borrowers.
and they're sourcing their money from investors or
It's
institutions,
still it's still coming from the small
so the
business.
SBA. Well, the SBA is guaranteeing it. Are they providing? They provide the cash, or guarantee the cash?
I think they just guarantee the cash.
Yeah.
So that's why you can go through some third-party lenders who have a higher risk appetite, and they'll still do SBA type funding to higher risk borrowers. This is a lot more expensive, right? You're looking at significantly higher interest rates than what you get through a bank if you were an A-tier borrower.
Gotcha. Okay. And you use the SBA for purchasing equipment, for acquiring a company, can you use it for debt consolidation?
Yes, I believe you can. I think there is, I can't remember the designation. There's a few different types of SBA loans that you can get access to. And I know there's one that you can use for debt consolidation if you're able to qualify. It can be a little harder. You may not be able to do it if you're like a C tier credit level. But yeah, if you're an A tier borrower and you want to do debt consolidation, there are some SBA products that you can use to do that. Okay.
Interesting. Okay. Then you can use your bank for a mortgage on a building. If you're purchasing a new building that you're moving, that, you're already paying rent, you just want to purchase the building. So that might be a good one.
Quick ad break. If you're like most contractors I talk to, you're probably drowning in day-to-day operations. I see it time and time again. You're wearing too many hats and there's no way off of the hamster wheel. That's exactly why I put together a free guide. It's called 24 Things You Need to Hire the Perfect Assistant. Now, I put this guide together to help any small business owner delegate over 50% of their current workload and buy back 20 hours of their time. And you may think that's unrealistic, but the most successful contractors I know all have one thing in common: a full-time assistant who helps them run their business. And this guide walks you through everything you need to know about finding and training the perfect assistant from creating clear expectations all the way to building out the right systems. It's not a fluffy PDF, it's really to the point, but it's still over 35 pages of actual practical steps that you can use right now. I've included templates, examples, and real processes that we use to help other contractors implement the right executive assistant. So the link for this guide is in the show notes. You can click it and download it. It'll be sent right to your email. Now, back to the episode. Talk to us about Treasury Management. I'm not familiar.
Yeah.
I'm very novice on that. Explain that to us.
Yeah, so Treasury Management is more about cash management in the business. And most of the all of the larger banks really have a treasury platform, especially if you're talking about like the big guys, Chase Bank, Bank of America. They both have really robust treasury management platforms. And what that means is you have the ability to really manage your entire treasury function through the bank's portal, meaning you can pay bills, you can send ACH transactions, you can receive ACH transactions, you can set up different types of account structures where you can have an operating bank account that you fund to cover all of your expenses, but then the majority of your cash sits in an interest-bearing account. And you can set up what's called a sweep function, where at the end of the day, all of your funds sweep back into that interest-bearing account so that they're earning interest. And then you just transfer what you need at the end of the day to cover the bills that you're paying on your operating account. And you can automate all that through the treasury management system, where your money is always where it's working for you as long as possible until you need it to cover expenses on the operating account. You can do credit cards through the treasury platform, company credit cards for your employees, to do expense management, things like that. So there's a lot you can do on the treasury side of a bank that has that capability.
So when would it make sense to consider a function like that? Like, for example, the sweep functions for earning interest. How much cash should you really have stored to consider that worth your time and interest in setting up?
Yeah, I mean, you probably really need to be north of $1 million in cash. To bother with it, but B, for the bank to have any kind of an appetite to give you that type of product, right? They're usually offering those types of products to larger clients with greater needs, where having your cash in an interest-bearing account versus an operating account is the difference of 6 figures of interest income, right? It's meaningful, right. It's impactful. Whereas if going to all the trouble of creating that complicated structure is going to make you $5,000 a year in interest, it's not worth anybody's time.
I had a sweep account in a company in the 90s, and the bookkeeping, it's probably automated now, but the bookkeeping was crazy because everything got swept out and brought back.
Yeah.
And anyway, it was like, whoa.
Yeah. Today it's pretty automated. It's a lot easier to manage. You just have one extra transaction, or I guess technically two extra transactions a day. One where the balance gets swept and the other where it gets put back. So it's just 2 extra transactions to categorize every day. So it's not a big deal.
Gotcha. Very interesting. Okay. So, we were talking earlier about, HELOCs on your home, to fund your business. You had a pretty strong stance on this, which is really good, but, why don't you, share with us, what do you think about HELOCs?
I am not a fan of using HELOCs on a personal residence to fund a business. I think you're taking on too much personal risk in that scenario. It's not a good risk management strategy. I mean, if you're going to go into business, don't put your personal finances, your personal financial health at risk. LLCs exist for a reason, right? We're trying to limit liability to the business owner and keep the credit within the business, and don't let it impact the personal equation. I mean, this is why SBA funding exists, so that small businesses, SBA stands for Small Business Administration, it exists to provide funding for small businesses. And take advantage of that. Keep the risk in the business, not on the you don't want to lose your house if the business fails, right? Don't go down that road. get SBA financing, keep the risk inside of the business, and have the intellectual honesty to admit to yourself that if a bank or even a third party lender will not give you SBA funding for your business, that's kind of a red flag that maybe this isn't the business you should even be pursuing in the first place. So don't just say, well, everybody who knows what they're doing thinks this is a horrible idea. I think I'm smarter than them, so I'm going to go put my house at risk to go start this high risk business that probably isn't going to work. That's just not a good plan.
Yep, that's kind of the reality of it is, hey, if I need to do a HELOC loan to be able to make the cash payment on my payroll, should I even be doing this right now?
Yeah.
There's other opportunities out there that
Well, there's a fundamental decision that you kind of touched on there, and it's not a certainty; it's a decision. But am I borrowing money to make up for losses, or am I borrowing money to? I'll just say one thing: for cash flow reasons. I got the receivables, I got the inventory. I might never get them sold. I might never get them collected, but it's much more likely than, wow, we've been losing our butts.
Yeah.
But I get a job if I can stay around. Now you're throwing good money after. That's a decision, guys. If you've been in business, you've had to confront that. You know, especially in the early years.
That's a great point, Martin. In the world of business, there are just certain red flags that pop up that you shouldn't ignore, that tend to be a strong indication that there's something wrong with your business model, right? A good example of one, well, I can't afford good accounting. So, I'd love to have a great accountant who gives me accurate financial data so I can run my business more effectively, but I can't afford it. Well, that's a red flag, right? You're not supposed to be running a business that can't afford to get accounting right. Like, if that's the reality of where you are, there's something wrong with your business model that you need to fix. A good business model has space and budget for good accounting. Like, if that's not you, your business model's broken. Like, it's a red flag. And to me, needing to fund your business with a HELOC on your personal residence, that's a red flag that says there's something wrong with your business model.
Yeah, that's a really good point. And I love that distinction. Like, are you taking on debt to cover losses, or are you taking on debt to, manage cash flow or for opportunities, to expand and grow, right?
Yeah. And nobody will put that up faster than a banker, by the way. They will get to the bottom of that fast.
Yeah. I mean, that's another great indication. If the banker's not funding you, you might not have a good business, right?
Yeah.
Yeah. Okay. So I wanted to kind of pivot a little bit, talk about cash efficiency and just making the most of our cash.
Yeah.
Let's talk about cash leaks. How can you find, in your finances where you might be leaking cash unnecessarily?
Having the right business model that allows you to afford the right accountants. That is by far the easiest way to identify leaking cash in your business, is having somebody in the accounting seat who knows what they're doing and is putting good data in front of the business owner every single month that clearly spells out exactly where all of the money in the business is going.
Just in passing on that same line too, are you taking a salary, or are you just getting by taking draws? If you're taking draws, your business model, right? Would you agree with that, Luke?
Depends on your business structure. I mean, if you're an LLC structured as an S corp, for example, and you're only taking draws and you're not paying yourself a salary,
that's what I'm talking about.
Now, it's not even just a business model problem. It's a tax liability problem. You're legally not allowed to do that. You are required by internal revenue code to pay yourself a reasonable salary. It's not optional. It's not optional, right? It's like you hear people talk about 1099 employees. It's like, that's an oxymoron. There's no such thing as a 1099 employee. You either have W-2 employees or you have 1099 contractors. It's not something you get to elect whether or not your employees are 1099 or W-2. And so many people think it's just, it's elective. I get to pick. Do I want to pay sales tax, or do I want to pay payroll tax or not on my employees? Well, if it was that simple, everybody would choose not to pay payroll tax, right? It's not. It's it's regulated. You don't have a choice. You have to do it.
But it's certainly out there.
100%.
Definitely. Yeah. And that's such what you've done with yourself when you're just taking draws is you're a 1099 employee. And that's not legal. Okay. So we
talked about red flags earlier. Like that's another one. Like you say, I have to do 1099s because I can't afford to pay payroll tax. Red flag, business model, broken, something's not right.
Yeah. You got to increase your margins. And if you can't increase your margins, then you might not have a good business, right?
Yeah. Which is funny because if you told most business owners you could double your margin, but it would cut your revenue in half, would you do it? Most of them would say no. Because they want the revenue. They want the revenue.
I got a little chart. I just put it away. It's a client I had today that his revenue take a nosedive, but his profitability it's up a little bit. I mean, gross numbers. And people go, what happened? What happened? Well, he just became much more efficient.
100%.
Made more money on fewer sales. Anyway, it's good that you mentioned that.
Yeah, it's great. Okay, so you had mentioned you have to have a good accountant in place who's putting those things before you. What are some common things that you would see where the cash is actually leaking? Like, what are some common areas that you see?
Well, I'll give you some examples from clients we're actually working with. And it's not like super complex, sophisticated things like you think. It's just people being asleep at the wheel, not paying attention, right? It's unused subscriptions. Software we're still paying for that nobody uses. Like, what's the software? What do we use it for? I don't know. Nobody knows. We're just always been paying for it. It's things like employees abusing expense policies. There's no real system in place to monitor employee reimbursements. How much mileage are they reimbursing? Is it reasonable? Is it accurate? If they have fuel cards for company vehicles, how do we know that they're only buying gas for company vehicles? Like, is anybody going and looking at the statement and saying, oh, hey, this employee had 2 fuel purchases for $80 each on a Sunday? Like, well, gee, red flag anybody, right? It's stuff like that of just people not paying attention, not having effective systems, processes, and controls in place to manage spend.
Yeah, that's good. No, and Martin, you told me about that fuel service that just comes by and fills the trucks up. That's a great reason to get something like that.
Yeah.
Comes overnight, fills up all the trucks. You don't have to have gas cards what people can use whenever. You just have one gas payment.
Well, and they also don't drive by the convenience store every morning, coming and going.
Well, there's also now there's platforms out there. I don't know if you guys are familiar with a platform called ramp.com. Mm-hmm. They offer employee expense cards that have some really cool technology attached to them where you can set really specific limits for employees. So you can give an employee an expense card and put a limit on there that you are only allowed to use this card for $80 in fuel once per week, period. That's it. And if they take that card to the gas station and they buy $75 worth of gas for the company vehicle, then they go inside and try to buy a candy bar, it'll process the payment for the fuel and it will reject the payment for the candy bar. Like, you can get really specific with the controls that you put around that stuff.
That's really cool. I like that. Quick ad break to tell you a little bit about OpenPhone. If you're a contractor that has a single cell phone, you're probably inundated with text messages and phone calls, oftentimes that you can't be responsive to or that you can't answer at all. So what's the solution? You can buy another office line with Verizon or AT&T, and you can have an iPhone that is passed around from employee to employee, depending on who's on call. But what if there's a better way? What if there's a way that you can have all your phone calls recorded to go back and listen to later, transcribed with summaries so that you can get a quick glance at what happened during the phone call, and even connect it to your CRM where all your other customer information is? OpenPhone is the perfect solution because it does just that. You're able to add all the users you need to for whoever needs to have access to the lines for your company phone, And then you can also find all of the information you need at a glance with a centralized location for all phone calls and text messages with your customers. Whether it's for marketing, for sales, or for service, OpenPhone is the perfect solution for you and your team. If you're interested, we have an offer down the show notes from OpenPhone. Please click the link down the show notes, or you can see it here on your screen to be able to find more information about OpenPhone. Thanks for listening. Back to the episode. Okay, so another thing on cash efficiency, whenever, and we've talked about cash reserves or a cash cushion, but what is kind of your methodology behind like maintaining a healthy cash reserve, but also, investing in growth opportunities? What's kind of your mindset?
Let me start with defining what a healthy cash reserve even is in the first place. And it's not some magic equation that you just go apply to every business, right? It's not 6 months worth of cash, bam, you're done. It's more complex than that. It's more detailed than that. And it starts with, what are the goals of the owner? What on earth is the owner of this business trying to accomplish? Where do they want to be 10 years from now? Are they building a business that they want to hand off to the next generation and ride off into the sunset, knowing that their kids are going to continue the legacy of this business that they've spent their whole life building? Is it, we're growing hair on fire, trying to build the biggest business we can over the next 10 years, and then we're going to sell private equity and exit? Like, what are we trying to accomplish? Based on those goals, how much cash do we need to be able to achieve those goals? And how much risk exposure do we have from a cash flow perspective? Based on those goals, based on the risk that we see in the business, in the local market, in the broader economy, we're going to establish a minimum cash threshold based on all of those factors combined. Once we achieve that minimum cash threshold, now it's a conversation from a cash management perspective of, what are we doing with excess capital generated by the business? Is there growth that we need to invest in inside the business? Again, is it, we're just going to grow organically 10% year over year and we're happy? Or is it, we're going to go and acquire 5 companies a year and 100x this thing over the next 10 years? Okay, well, if it's a aggressive, complex acquisition strategy, we're taking every dime of cash we can get and using it to go buy companies, right? Whereas if it's just organic growth and we just want to make money, will we get to that healthy buffer that we need from a cash balance perspective? Now we can have a conversation about, how much of this excess cash do we just distribute out to ownership and let them use it to build wealth on the personal side of the equation?
Yeah, that's really good.
I think there's one other nebulous one in there, and that's to save up to your sleeping point. We used to say sell in the stock market, say sell down to your sleeping point. But different people have that different levels. But I have clients that are so freaked about cash that they have more in reserve than other people do. And you can say, well, that's stupid. No, it's not stupid. Well, you might not even think it's stupid. But what it lets them do, by them being calm, they make better decisions. They're not freaked out about things.
Yeah.
They have available resources to buy an opportunity that comes along. It doesn't have to be another company. It could be a piece of equipment or something like that.
Yep.
So that sleeping point is a big part of it.
Mm-hmm.
Luke, everything you said, absolutely. But man, if I got this much money around, I can sleep.
Yeah.
It's just that simple.
Well, let me tell you a quick story, Martin, about a client I worked with that I think touches that exact concept, because I think we can move that sleeping point. And here's why I think that. I started working with a client. I came on board. They had $4.5 million sitting in a Chase operating account doing nothing. And I said, why do you have that much money sitting in a Chase operating account doing nothing when you could take $3.5 million of it and stick it in a interest-bearing account and make 6 figures a year in interest income on that cash? And they said, well, we're just afraid we won't have enough money to pay our bills. And we like having that money in our operating account. It makes us feel comfortable. We don't have to worry. And I said, well, how much money does it take you every month to pay your bills and run your business? Well, we're not really sure. That's why we like having all that money there. So we came in and we built a financial model We
Cash
put
flow
together,
analysis.
we put together a really robust, really detailed, really accurate 12-month cash flow forecast. And we said, look, here's exactly how much money you need to run your business over the next 12 months. Turns out they needed about $700,000-$800,000 a month in cash to run their business.
Yeah.
And
Yeah.
when they could see that, and they could see 12 months out exactly what that looks like, all of a sudden their comfort level to take $3.5 million of that and stick it in an interest-bearing account changed overnight. They went and opened an account with Chase, moved $3.5 million over. They're going to do almost six figures in interest income this year simply by making that banking change, all because we were able to change that comfort level by putting better financial processes in place.
And Chase is upset with you because they used to have that $3.5 million for zero interest,
That's okay.
but they still have it. They still have it. Yeah.
Well, they still have it, but we've also been able to step into a deeper relationship with the bank too by going in and kind of forcing the client into some conversations with the bank of saying, look, your bank's not serving you well. We either need to get them serving you well, or we need to find a better bank. And, now a year and a half later, instead of just having an operating account with Chase, we have an operating account, we have an interest-bearing account, we have credit cards through Chase. We're using their Treasury Management platform to pay all our bills. We have line of credit. The bank is serving the client better, and they have more of that client's relationship, which is ultimately better for the bank.
Yeah. Sweet.
Well, Luke, if you can get $3.5 million into interest-bearing accounts for anybody in our audience, I think you're going to get a lot of clients. No, I'm just kidding. I think it's a great perspective to have, and really at the heart of it is just knowledge about what's required to make your business operate.
Yeah.
And if you do that, then you're really going to have a better understanding of your sleeping point and how much money you need to have to, save up to your sleeping point, like Martin said.
I feel like there's just this misconception in the business world that it's not possible to feel comfortable. Like, well, it's just business, right? You never really know what's going on. You kind of just, you do your best, you trust your gut, and you hope everything works out. Like, that's just the way business is. Like, bull crap. That is not the way business is supposed to work. You do not have to run your business that way. You can invest wisely in how you build your team within your business to deliver good data accurately, timely, where you are running a data-driven business. You know exactly what's going on. You know what's going to happen in the next 6, 12, 18 months because you've got people in place who know how to put those kinds of numbers in front of you and let you make better decisions. You do not have to fly blind. You do not have to trust your gut. You can run a data-driven business.
We've been centering on cash and banks here, and so we don't need to go too far afield on KPI ratios, but what are some ratios that banks, I make this point, if a bank is interested in it, I ought to be too. Not because I want them to lend me money, because they're interested in me surviving and I'm interested, so we can learn from them. So what are, they get into debt to equity and all these kind of things that are used in the public arena. And a lot of really small guys don't think they need that. They don't know what that is. I don't know if they always need it, but what are some KPIs that banks are going to look at, and therefore our guys ought to know about it?
Yeah, honestly, it's not usually as complex as you probably think it is. They're operating a lot of times on the fundamentals. Like, what's your profit margin? Are you running a profitable company from a margin perspective? What's your net profit? Are you managing the profit from your revenue effectively to run a profitable company from a bottom line perspective? And if you want to borrow money from us, what's your debt service coverage ratio? Meaning, what portion of your income, your net profit, or EBITDA is usually what they'll do, which is just earnings before interest, taxes, depreciation, amortization. It's a common financial metric. EBITDA and your debt payments as a percentage of your EBITDA or as a ratio to your EBITDA. They're looking for you to be within a certain range to be able to show, hey, this is a company that has enough profit to service their debt and still have enough left over to run the business profitably. And if you can nail even just those couple of metrics, you're going to be in pretty good shape.
You want to throw out a number for the debt coverage ratio?
It probably,
I know some and they're lower than I would think, but go ahead.
if you're under 1.2, you're probably in trouble.
That's the one I hear. And that means that you have 1.2 times more current assets, cash and receivables than you do debt that's likely to come due real soon, like payables, right?
That would be your current ratio. So when they look at debt service, they're looking at
debt.
They're looking at the ratio of debt payments to your earnings.
Gotcha. Yep. It jumped up in the balance sheet.
Yep.
Yeah. Making enough to pay all your expenses and your debt service.
100%. Yep. So if you can show a debt service coverage ratio of 3 or 4, you're not going to have any trouble.
Yeah. Gotcha. Really interesting. Well, I think for a lot of our listeners, they're not aware of these ratios, and it's probably a conversation they should have with someone like you, Luke. How can people get in touch with you if they're interested in learning more about, how to manage their finances better in their business, how to have strategy for their cash, how to be more efficient with their cash, how to, be able to establish the relationships they're looking for with the bank strategically?
Yeah, I'm pretty easy to find. I don't know if there's this really interesting website, or at least there used to be. I don't know if it exists anymore, but it's literally howmanyofmearethere.com.
Oh yeah.
You can put in your first and last name and it'll tell you like how many people have that same first and last name. I'm the only Luke Boyenger in the entire United States. So if you just look up Luke Boyenger on LinkedIn, it's pretty easy to find me. Message me there.
You go.
I'm pretty active on there. I'll definitely respond, or shoot me an email at info@cruzumi.com. That's CRUZUMI. I'll respond there. We have a website, cruzumi.com. Any of those are great ways to get in touch with me.
Okay, excellent. We'll put
what
all
was
those
the name of
in the
that
show notes.
site? How many are there of me, or how many of me are there?
I think it's howmanyofmearethere.com, something like that.
Well, you want to give me an over-under on how many of you there are in the U.S.?
There's probably at least a couple hundred Khalil bin Ali Al-Hajjas in the U.S. No, I'm just kidding. No, I'm the only one. I think so my last name is actually not even common in Morocco, where my family's from. So, like I tell people my last name in Morocco, they're like, what? So I think I might be the only Khalil bin Al-Hajj in the world, which would be a pretty unique thing.
Yeah.
I'm certain that my wife is the only Powell bin Ali Al-Hajj in the world, with very high certainty.
Yeah, that's awesome.
Yeah.
Anyways, man, Luke, thank you so much for joining us. We'll put all that information in the show notes for Cruzumi and links of how to get in contact with you and your email. Appreciate your time, and thanks for all that you do for the industry as well.
Absolutely. It's a pleasure. We love serving business owners. My business philosophy is just help business owners when possible, get paid to do it. So, I mean, we spend a lot of time just talking to business owners, giving them advice, trying to help them however we can. And if they never end up being a client, paying us anything, that's fine. I didn't start this company for the sole purpose of enriching myself. We just really want to provide value to the business community. And when we get opportunities to do that, we never pass on it. Just believing that at the end of the day, there's going to be enough businesses out there that eventually want to hire us and work with us long term that we're going to be fine.
Yeah. Yep. Absolutely. Love that philosophy. Well, appreciate you. We'll see you guys around. Thanks, Luke.
Okay. Thank you both. Appreciate it.
You made it to the end of the episode, but before you go, if you found yourself thinking about growing your construction business while listening today, I want to share something with you. It's called our 24 Things to Hiring and Training the Perfect Executive Assistant for Your Construction Business. And it's a free guide that we've created. It's not theory. It's what we actually use to help contractors hire the perfect executive assistant. And really, we help you find ways to delegate over 50% of your current workload and get back 20 hours of your time every single week. You didn't start your construction business to just be doing admin work, to be buried in paperwork and endless admin tasks. This is the guide that shows you exactly how to find and train someone who can actually take all that weight off of your shoulders. So this is a real actionable, great PDF that has templates and processes. It's
really, really great. And I want you to check it out, even just to get your feedback and how we can make it even more valuable. But I know that you're gonna love it. The link is in the show notes. Please download it. Would love to see how much of an impact it makes on you and your business. Thanks for listening to the full episode. Check out the guide. It's free. No reason to hesitate. No reason to wait. Download it now. And before you go, I just want to ask for your gracious subscription to our podcast. So if you have 2 seconds, it means the world to us. Just subscribe on YouTube, Spotify, Apple, or if you'd like our weekly newsletter delivered to your inbox whenever we release an episode, please subscribe in the show notes. Every week, we're talking about real strategies on how you can grow and build a profitable construction business that runs without you, so you can have less stress, more time, and more money. Click subscribe wherever you listen to the show, and thank you again for checking out the Cashflow Contractor. See you on the next episode.